back with another little video, and today I'm going to be going over the volume profile and how I use it and what I use it for. Basically just explaining what it does, the reason it's doing what it is, and just basic explanation for anyone that doesn't know how to use it basically. So as you can see, I went back to a random place in time. This is in September 16th 2020, so this is a while ago. The price is at 28,000, so if you trade US30, you know this is back in time. So we're basically going to be looking at this area of price right here. So before I put my markups on the screen, I just want you guys to look at what's going on. You can see that price was trending up, and we've had a big retracement, breaking structure right here at 27,500, and we traded up and we're breaking this low right here. Also broke the high, and when I put my markups on now, you could see what's going on, and I'm going to explain it before I get into the volume profile. So basically, price came down here. Let me get the arrow. Price came down, went up, created this order block on the 4-hour time frame, and then continued to break these lows to the left at 27,500. Broke the lows, came up, and as you can see, it came up right here, came down, came up, rejected, came down back to 27,500, and as you can see where we are in price as of right now, we rejected this 4-hour order block for the first time since the 7th of September, and now we're at the 16th, so we rejected it. We also rejected the fib, which I have drawn from the top where this order block was created to the bottom right here where the last bodied candle was. We're now creating a bearish engulfing at this area, so that's 4 confluences we have right now. So let me mark that up. I'm going to put the confirmation. So we have 4-hour order block, we have fib short rejection, and I like to put these confirmations here like this is on my screen so I know the reasons I would get into a trade. Downtrend, so we have the fib short downtrend 4-hour order block, and depending on time of day, this is at 14. I don't even know what time that is. I don't know military time, honestly. So this is 10, so this is sometime in the morning. If this was around my time frame, around New York session, which is not, then that would have been my last confirmation. But as of right now, we're just going to be looking at this. Don't worry about the time. We're just going to be going off of basic price and what's going on. And our last confirmation we would use is the volume profile. And if you don't know what the volume profile is, it's basically just showing you where most of the volume is in a given area. So say over here, this volume profile that I have here, this is if you go to indicators, go to volume profile, is it the session? Yes, the session volume. That's what this is. And if you can see, it'll show you the volume to the right of everything that's on your screen. So as you can see, it moves. If I move it over and it shows more, it will give a different point of control, and that is the red line. The point of control is basically where most of the volume is that you can see. So as you can see, 90% of the time or 99% of the time, the point of control is going to be where the most consolidation occurred. So as you can see, we consolidated, came down, went up, but eventually came back down, and there's just a lot of volume building up in this area, which is a lot of orders from people selling, buying, and that's why price ranges, because it doesn't know where it's going. It's just basically accumulating a whole bunch of orders. And that's where you can see price always is attracted to. The highest volume, that's where price is attracted to. And up here is if you look at these candles right to the right, you can see the bigger the candles, the more volume in that area. The smaller the candles, the less volume. Like these areas right here. And basically where there's candles like this is the low volume, aka liquidity. And also where there's liquidity, there's imbalances. So if you watch my other video, you would understand what an imbalance is. You can see that there's an imbalance up here, right in this area. And as you can see, that's where the low liquidity is. The low volume, there's an imbalance there. Same thing down here. There's most likely imbalances somewhere over here. I'm not going to get in. Right here, you can see one. Right here, that's been filled. But you get the idea. The lower the candles, the smaller the candles, the less volume is in that area. And the higher the candle, the more volume is in that area. So I'm going to take off this one, and the volume profile that I'm going to be using today is the fixed range. So the fixed range, you move it like this. It's like a fib. You draw it from the high and the low, and it's going to give you the volume of that given range in that area. So as you can see, from this high at 28,586 to this low at 27,372, the most volume is right here. right at this price. See this big candle in point of control? That's where the most volume is. That's where the most orders are accumulating. And as you can see, after we rejected this order block, after we rejected this fib, after we're rejecting 28,200, that is actually another confirmation. 28,200 is one of our levels and it's rejecting it. So that's 4 confirmations right now. Plus this 5, because as you can see, let's just go back in time real quick. As you can see down here, you can see the point of control was still up here, and you could have used that as basically another confluence, knowing that price could possibly trade up into this area because this is where the most volume is, knowing it could have traded into this area, expecting to keep the downtrend. So let's just go back up a little bit. Price ended up coming back in, started rejecting, doing what it's doing, came down, went back up, and now we're right here. We're rejecting, and I'm anticipating price to keep going lower. And the reason I know I have that is because we rejected a 4-hour order block. We rejected this fib short in this downtrend, and we're rejecting a whole number right here, 28,200. So we can anticipate price, if we could break these lows right here, we can anticipate price to come down to 27,800 and then possibly 27,500 later on. Because knowing that, we're going to target the other big candles. The biggest candle besides this one right here is down here. Let me mark that. So this is an area, it is not going. This is an area we would want to watch out for. This is an area we would want to get out of our, take partials, anything if we get there. But that's only if price makes this area. These are basically targets ahead of time, basically before anything even happens. So let's just watch what happens. Price broke this low, as you can see. And look where it's rejecting. Came down, rejected this 4-hour bullish order block, and as of right now, we would have been already out. We would have took our partials, we would have got out right here. Stops would have been above here when we did it, but this is just hindsight, so I'm not going to get too deep into it. And we're also holding the 27,800 level, holding it very well, because as you can see from this candle rejection, this is a 250 pip candle. Mind you, we're on the 4-hour time frame, so this is very strong confluence. And if you look at the time of day, this is 2. And 2 meaning 2 in the morning, that's around London session in an hour, so you can anticipate price is probably going to have his retracement. But that's not really the focus of this video. I just wanted to show you guys how I can use this volume profile, and I'm going to use another example. I'm just going to go over here. Let's just say right here, we're just going to go to this random spot in time right here, and we're going to use it on a smaller range. We're going to do the same thing but in a smaller range. We're going to get our fib, draw it from this top candle, draw it from here. Look, 2 confirmations, 2800, 28,000 level. We're also rejecting this fib short, and if you see this order block right here, we came into it, rejected the 79. So that's already 3 confirmations that we want to see price fall. And depending on time of day also, it's also 14, coincidentally. We're not going to mind that. But as you can see, now we're going to do the same thing we did. We're going to get our visible range so we can see where the most volume is from the high to the low of the area that we are trading in. From the high to the low, and where is the most range? The most volume is up here. So price could possibly keep coming up, but as of right now, we have more confirmations down here anticipating the drop than not the drop. So we're just going to see what happens. Our first target, we would want to see price break this low to keep continuing lower to possibly break these lows down here. We're going to see what happens. We start ranging. These are very small candles. We would have to wait for the volume to kick in. Now we have this candle right here. This bullish candle. As of right now, that's a little going against our analysis, but this is just hindsight. I'm just using that example. As you can see, broke this low, came, rejected 27,800. These numbers that are being used on US30, I've back tested and they work. They're respecting these levels for a reason. They could also go to 750. I don't use quarter points. If you know what quarter points are, it's basically every 250. I don't use those no more. I use my 800, my 200, my 500, and my whole numbers like this, like 28,000. So this is kind of a bad example. It is more of a range market, but you can see what happened. And as you can see right here, we had this drop, and we would have been taking partials along this whole way. That's why I stress taking partials, because you never know what's going to happen. You always want to secure profits and break even when you're already up in profit, because if you go to a casino, you don't win money and then go back and risk it. You win money, you take some, and then you risk what you already made. That's how everyone does. That's how people are profitable in this. So as you can see, let's see where price ends up going. Yeah, it ranged, but overall, it did fall down. And if you look at the bigger picture of where the most volume is in this area, this is too big. Let's go like this. Where's the most volumes at? It's not really showing it. Alright, yeah, so we're gonna use the visible range. Sometimes you can't really use that range because it's not gonna show you in that area. So let's pull the visible range out once again. We're gonna pull it from this high. Let me get it. We're gonna pull it from this high to this low now. And where is the most volume? Right up here. And like I said, where's the most consolidation at? In this area as of right here. So we can anticipate price will have a retracement to that level. So let's take off these other confirmations that we had. Take off all of those. And we're gonna draw it just like this. From the fib, draw it right up here, and look where our fib is. Right where that point of control is. And guess what? There's also this order block right here that we have at the 62% under the fib. And we also have one right up here. This is a bigger one. This one right here at the 62% will be more of a refined entry. And this bigger one is kind of, I wouldn't say it's refined, but it's more risk because you would have to have a bigger stop loss with this. But for this example, we'll just have this refined one. And we're going to anticipate price depending on time of day. 2 in the morning, we can anticipate price with the volume of the lending session to come in, fill in these imbalances, trade up into this level to possibly keep going lower. Might not happen, but this is just, I'm just using my volume profile with the confirmations that I already used in my strategy. And look what it does. See, this is all hindsight. I know you guys could just say, oh, he's capping, anybody could do that. Yes, anybody could do this, but I encourage you guys to go try and do it yourself so you can see it yourself. And look, fell all the way down. But the thing with US30, it does things like this, has very, very big candles and then goes back up. But as you can see, where did price end up going to? The point of control, right over here. This range, the point of control of this range was right out here at the 70.50%. This is where all the volume is, and that's where price overall went to. But you also could have still caught this trade just from using these regular confirmations that we use on a daily basis. And then price kept going up after it did all this did. I'm gonna have to do one more example for you guys just so you can get a better feel. Let me take these off. So you can get a better feel for this. So let's just go right here. Right, I'm trying to find a better example. This is a lot of range right here. Range. This is very far back in time. US30 wasn't moving too much around this time. I'm trying to find a clear example. Just move down to the hour time frame now. Right here. This is a okay example. We're gonna go back in time right here from this point, and we're gonna do our markup of this little area right here. So from the top, the highest high, to the lowest low, we're gonna draw our fib. As of right now, this is kind of overbought, so we're not gonna use that. We're just gonna use this order block, 4-hour bearish order block right here. That's what prices are right now. The fib could be better on a higher time frame, so let's do that. Let's go to the daily. Go down. We're gonna pull our fib from this high to this low all the way down here, because if you saw in the 4-hour, it wasn't respecting that area. It was already highly overbought. So we're gonna use this daily fib, go back to the 4-hour. Now we can see we're at this order block on the 1-hour, rejecting, and we know on higher time frames we're at this fib short, the 79%. We're over on the downtrend, and now we're getting these confirmations. So what I would do, I would get my volume profile. I will get it from this range. Let's find where all the volume is, right down here. And then what is down here, you could also see where this volume, the point of control, there's an order block right here. A 4-hour order block right at this level. 4-hour bullish order block. So we can anticipate price to trade all the way down back to here. Let's pull our fib. We could also anticipate price to come right here because this is also another order block. These are all areas that I will be targeting. So the same way that I trade off of these levels, I trade price to these levels. So I know that the point of control is down here, and if you look at the levels these are at, 27. I don't have my levels marked, but we have 27,800 right here, right at the 79%, right at the 4-hour fib. So I'm going to take this because there's more confluence in this area right here. So we would anticipate price to come back to these levels. It could go farther, but this is our area that we would want to take off most of our position. So now we just wait. So we have this order block and we're trading it down to this fib, and let's just see. We would have got out in this area. See, price ended up falling lower. Sometimes it does, and as you can see, it came to this lower area right here. There's an order block right at this level. But the reason I use these fibs is because it gives you a good area to get out before. So there is times you're going to miss profit, but you still would have been able to catch 300 points out of the 545 point move. And just by using the volume profile on our simple strategies that we already use. And as you can see, where's the low volume? All down here. And where did the price go to? All the way down here. It's just basically knowing where liquidity basically lies, knowing why the volume profile is doing what it is, and knowing where price is going to go to. Because if you know there's a lot of orders in this area, the chance is the banks are probably going to move price to that area once again. So now you can see that we're rejecting off of this area, off of this order block. We would take this off. Let's do it again. We're going to find where's the most volume in the range from this low to this high now. And where's it at? All the way up here. And then you can find more confluences. I'm not going to do it all right now, but you can find more confluences in this area to then trade price up there once again. And let's just see what it does. It could go lower. Price ended up going lower. But these are just hindsight examples. Not everything is going to be perfect. This is all hindsight. But hopefully this video can help you guys a little bit on how to use volume profile. A volume profile is, I'm gonna just go over it again, is basically just showing you where all the orders are, where most of the orders lie, and where there's not a lot of volume at. Price likes to move back to where there's a lot of orders because banks, they're getting out of positions in these areas. Banks don't like to lose money, so they will trade price back into where they had their entries so they could break even and then run price back in the other direction. So hopefully this helps you guys. Suggest you guys back test it yourself, because I could say all I want, but if you guys don't try it yourself, it's not really going to benefit you. So I say back test it so you can get a feel for it yourself. And I'll see you guys in the next video, and you guys stay safe.